Good evening, traders. I'm back with another video on GBP USD. This is the monthly chart. I'm here to analyze this pair with you guys. As you know that tomorrow the market will open. So now I'm trying to check what is going to happen. Now what I'm currently seeing here, I want to see, now what I see the void here. I see the gaps here where the market has left the gaps here above these relative equal highs. So now I think that the market will have to go back there to close all these gaps here. The market will have to go back here. Let me show you. The market has to go back to close this gap here, as you can see it, because this one was already been closed, was already been filled. So the market has to fill this one also. But by the way, the market is in the bullish, the bearish trend. Let me show you. Let me show you that we are bearish. So the market had this one. This was the the higher low, higher high, higher low, higher high, higher low, higher high, and then it created this lower low, and then we had these the lower highs here, and then this was our final, this was our lower low, and then this one was our final lower low. So now we know that we are bearish. So the market, only thing that the market has to do, it has to move to the upside to close this gap here before continuing with the bearish trend. So let's go ahead and analyze this pair. Okay, what I see here on the GBP USD, I see something like an accumulation. So as I told you yesterday, that for the price to move back there, because it will take long time for it to reach this area where it's supposed to be closing the gap. I mean, so now the price has to accumulate, or the price has to form something like a Wyckoff schematic. So let me go ahead and try to mark up the Wyckoff schematic that I see here. If there is no Wyckoff schematic, then I'm not comfortable taking this trade to the upside or taking any trade here. I will just go ahead and try to analyze another place. But here, what I see here, I see they said something like a selling climax. Let me try to make it visible to you. Okay, I see something like a selling climax here below here. This is a selling climax. Let me try to label it very fast. Now I see the selling climax. And then what I see again, I also see the secondary test in phase A. This is a secondary test in phase A. And also, I also see something like automatic rally to the upside. This is an automatic rally above here. I see the automatic rally here. This is automatic rally. Perfect. Now I also see this one. The price was supposed to give us the SOS, which is the sign of strength. Now the price didn't give us that sign of strength, and then we got our sign of strength somewhere here by a few pips. It is above the AR by a few pips, but by the way, that one is a sign of strength. This is our sign of strength. Now, let me try to put it here. And also what I see here, I see something like a creek, which is here. Let me try to label it as well. I see something like a creek here. Let me try to label it. All right, so now I'll go ahead and mark up or label this Wyckoff schematic so that you'll see how to trade the Wyckoff schematic, or how to see if the market is going to move to the upside. All right, so let me try to change the color, because the red color it doesn't look good. So let me change the color to black. Change the color to black. All right, so now let me also change this one. Maybe it's going to be a good idea for me to change it as well. So, all right. So now we have this second climax. After second climax, we have the NR, which is the automatic rally to the upside. And then after that, we had the retracement, which created the secondary test in phase A. After that, we had this creek here. And then thereafter, we had what? We had our sign of strength. We finally got our sign of strength. After that, we had the market falling down, trying to create what? The secondary test in phase B. This was a secondary test in phase B. second test in phase B. So what is the aim of doing this? I want to show you that if the price has to push to the upside or downside, but it has to take a lot of time there. It has to spend a lot of time to arrive at our point of interest. As in this case, you want the price to move to the upside to close the gap that was left there. So the price has to accumulate or distribute. The price has to form a Wyckoff schematic because it has a power of moving the price, pushing the price to a certain direction if the price has to take a long time to arrive at a certain direction. So the price has to accumulate or the price has to form a Wyckoff schematic. So the market makers will go ahead and create the consolidation, which is also known as a Wyckoff schematic. So the market makers has to go ahead and form this Wyckoff schematic so that they continue grabbing the liquidity, hitting the stop losses inside that Wyckoff schematic. I'll show you how the market makers create, hit or grab liquidity, hit stop losses or grab liquidities. So now the market, it has given us this one. All right, I'm sorry about that. So the market has given us the secondary test in phase B, as you can see it here. The market gave us a secondary test in phase B. Now, once again, we also got the spring. We call this one a spring. So we also got the spring here below this one, below this low, because the first thing that we're supposed to be getting is a secondary test in phase B. After that one, we must have the push to the downside, which creates the spring. So now we finally got our spring here below the secondary test in phase B. This is our spring. This is our spring below the secondary test in phase B. It has to be below the secondary test in phase B, the spring. So it occurs below the secondary test in phase B. So you can see that now we have our ascending climax, only the PS that is missing here, but that doesn't matter. We're going to go down on weekly time frame and try to find that missing one, that one missing concept, which is the PS, which is terminal support. So now we have the second climax, automatic reaction, or automatic rally, and then after that we got our second test in phase A. After that we got our creek. After that we got our push to the upside, which has collected the liquidity above this creek. This is our sign of strength, which shows us that the market is ready to go to push to the upside, but not now. As you can see, if I were to show you this, let me try to remove this thing here. If I were to show you how did the market makers grab liquidity around these zones, you can see that here there was this trend line here. This trend line here. Let me try to use this pointer. There was this trend line here. There was this touch. Remember this: for you to have support and resistance, for the retail traders to draw support and resistance, they need at least two touches. They need at least two touches. As you can see here, they got this touch, one touch, the second touch here, and then the market, it pretended as if it wants to hold on this trend line, and then it breaks it out. It hit the stop loss that was here. If you can check that, guys, the market makers has hit the stop losses that were here below this low, because they have this touch and also this touch. Then they will go ahead and wait for that touch for them to buy based on this trend line. So the market makers, they push the price below this trend line. They've also tried to make it look like a break and retest, because the retail traders, they trade like this. They say, let me show you, let me try to make it visible. They say to themselves, even if you can go to YouTube and check these things, you got this touch here. You got this touch here. I'm trying to make it look perfect. Okay, you got this touch here. The first touch, the second touch. I'm not saying to you guys you must learn how to trade support and resistance, but at least you must have some basic support and resistance, because even the market makers, for them to know where are the stop losses, they use trend lines, they use support and resistance to know where are the stop losses of the retail traders. Let me repeat that one. The market makers, big banks, big institutions, big banks, big players in this game, they use support and resistance to know where are the stop losses of the retail traders. I hope that one is clear. So now I said to you, they need at least two touches. They need at least two touches on the trend line for the trend line to be valid. They need them according to the rules of support and resistance trend lines. So here they got this touch, also this touch. Now they are now waiting for a third touch. They are now waiting for what? A third touch. So what is going to happen? Now the price, it came down, it came down, trying to pretend as if it wants to respect this support, but it broke through the support and this support, meaning it hit all the stop losses that were below here. Because if you buy here, the stop loss, your stop loss must be below this low. So the market makers, they moved the price below this low here. So now the retail traders, they will then wait for a breakout, for a test of the trend line, and then take the sell based on the break and retest strategy, on their break and retest strategy. So now the price, it broke here, hitting the stop loss, the stop losses that were here below this recent low, and then the price, it went back to test the trend line, as you can see here. So the retail traders, they will go ahead and place a sell based on the break and retest strategy. So the price, it pretended as if it wants to go lower, and then it went back up aggressively. I mean, hitting all the stop losses once again that were here that were placed by break and retest traders. So it went up like this, and then it finally pushed to the upside. You can see that there's a lot of confusion that is being created by market makers here. So my point for this is that for them to move the price, if the price has to move from here up until around these zones here. So let me try to show you what I'm talking about. For the price to move from here up until these zones here, you can see that here there is this gap. There is this gap, which is also valid. It is aligning with this base rally here. This gap is indeed valid. So the price, they need, before they push the price, they can't just push the price lower, but they have to push the price back in order for them to give themselves, to allow themselves an opportunity to close this gap here, this fair value gap here, which is here. So now, for them to push the price from here up until here, they needed to form what we call a Wyckoff schematic, or an accumulation, for them to be able to push the price there very fast. So they need to collect or to grab liquidity, a lot of liquidity, for them to move the price to up until this stage here. You can see that this is the monthly time frame. It will take very long time for them to arrive at this area here, or at these zones here. So now let me tell you this. Let me try to erase this thing. Let me try to erase this thing. Let me try to erase it all. Now, look at this. Look at this now. So as you can see at this scenario, they've already started grabbing liquidity by this thing. They've already started, they grab liquidity here. As you can see that here, if I were to draw this trend line here, you can see that this move that went to the upside, it grabbed some buy stops here, and also stop losses that were here, by just this long white candlestick that went to the upside to grab liquidity. This was a false breakout, this one, once again. You see, this was a false breakout, meaning this move, it was a manipulation, this one, a manipulation. This move was just a manipulation, this one, meaning this move is the one that grabbed the liquidity that was above here. It is the one that grabbed the liquidity that was above here. So now that's all I wanted to show you about the Wyckoff schematic. What is it for? Now about the Wyckoff schematic. Now, let me try to also show you this. Please bear with me. I just want to highlight only a few things here. Now, as you can see here, this one, it also looks like a relative equal highs here. You can see that, meaning if the price push to the upside, it will also grab another buy stops here, or stop losses that are above this recent high. Let me repeat that one. you can see definitely here, there are traders that sold here, and then their stop losses are above here. And also, there are traders who put their or who placed their buy stops here. Why do they do all that? Let me show you this. Let's say the market was here and it went to the downside. So these traders, they believe that the market, when the market went back up, when the market go back up like this, they think that the market will just pass like this. So that is why they place their buy stops here. Buy stops here. So they think that the market will just, after coming back down here, it will just rally to the upside just like this. No, the market will not do that. The market will just rally like this to the upside and then grab the liquidity to come back down before continuing to the upside. That is what the market is going to do at this point of area here. So now let me try to get rid of these drawings here and try to focus on the analysis now. So I wanted to open your eyes about the manipulation. How does it take? How does it form? How does it have to occur? Now let me try to go ahead and mark up this GU here. So by the way, we're still on the monthly time frame. The question is, where is the PS, perennial support? Let me also show you this. Sometimes you won't find a perennial support or supply, depending whether we're in the accumulation phase or distribution phase. But in this one, we are on the distribution, I mean the accumulation phase. So now we don't have the PS or perennial support according to monthly time frame. But I'm very sure that if you can go down to weekly time frame, we can find the missing concept here, the missing word, which is the perennial support. Let's just go down to monthly time frame or to weekly time frame. Okay, according to monthly time frame, let me just mark up this zone here, this gap here. Let me just mark up this gap here. Let me just mark it up. All right, so let me also put another trend line here. All right, so now the market has to go back up to close this gap. It can then continue with its move to the downside. It can then continue with its move to the downside, because the overall trend is bearish. The overall trend is what? Is bearish. So only this move that went to the upside aggressively, and then the price, it went to the downside, grabbing the liquidity that was here and also here, grabbing the sell stop that were here. As you can see here, let me show you something. If you can check below this low, what you see is that the market, it went below this low before shooting to the upside. So what was the aim of that? The market even went, this is not the first scenario, even if you can check here. I just want to open your eyes, traders. If you can, please bear with me. You can see that even here, the market, it went below this low, this low. It went below this low, doing what? Grabbing the sell stops. As I was making an example here, that there are some retail traders who will go ahead and do what? And place a sell stops here. Why? Because they think that the market will just rally. They think that the market will just go to just drop to the downside without coming back up. So the market, you can see that the market, it went back down, grabbing the sell stop here, then it went back up. Let me repeat. The market went down, trying to grab the selling stops here, and then it went back up, hitting all the stop losses of these buy stops right over here. That is what is always happening in this market. Now, you can see that the market, after grabbing the buy stops, I mean the sell stops, it went to the upside like this for a very long time. So what does that mean? What does it? Let me try to talk about this scenario only, which is this one. All right, good people. What does this mean? It means that as I was telling you at the beginning of this session, I told you that for the price to go to the upside or downside, if the price has to take very long time to go to reach a certain level, the market makers has to accumulate, has to form a Wyckoff schematic. If the price has to move to a certain direction, but you find out that the price is going to take a very long time. So the market makers has to try and form a schematic or a Wyckoff schematic, because they know that it will take very long time. So they need more liquidity if they want to move a price for a very long time to a certain direction. So they need more liquidity. This is what you see happening. So what I'm trying to tell you is that the price will not leave a certain zone completely without creating a liquidity. The aim of these guys is to take our money. They want to take our money. They won't move the price for a very long time, or if they want to move the price from here up until here, they need to start by grabbing liquidity. That is a fact. I've already proven that to you. If they want to move the market to the upside like it did here, they have to grab liquidity first, because they use liquidity to move the market. They cannot afford to move the market without having more liquidity. So they need more liquidity in order for them to allow themselves to be able to move the market for a very long time, or to move the market like this. As you see, the market, it moved very aggressively. This was a strong impulse to the downside. So now let me also show you this. So as you can see here, the price did the same thing as it did here. The price it moved. This was the first move to the downside. It went back up, this move, meaning it was just a manipulation, this move. Once again, even here, the same thing happened. The same thing happened. The market moved aggressively to the downside, grabbing the sell stop that were below this low. Grabbing what? The sell stops that were below this low. You can see that the market, after grabbing that liquidity, after grabbing the liquidity there or sell stops, it went back up like this to close this gap that was here. Let me show you the gap. It went back up after grabbing liquidity to close this gap that is here. To close this gap that is here. You can see that. To close the gap that was here. So the aim of them, if they want to close the gap, if these guys, they want to move back the market, to close, for the aim of closing the gaps here, you can see they have to start by collecting or grabbing liquidity in order for the market to move like this. Okay, let me show you something. For the market to move like this, strongly like this, they have to do something like this. This one. So they have to do something. They have to move the price firstly like this, creating a double bottom somewhere here. By doing that, retail traders will go ahead and buy. What will happen is this. This high will be here. And then, okay, let me try to draw this thing on this side so that it will be clear. Let me try to draw it on this side. I hope you're still good there. All right. So now these guys, they will do something like this. We have this first leg, then they push to the upside, push to the downside, push to the upside, push to the downside, push to the upside, push to the downside, push to the upside a little bit, push to the final move before we see the big move to the upside. So this one is for PS, terminal support. This one was for selling climax. This one is for automatic rally. This one is for secondary test in phase A. This one is for sign of strength. So already you can see that the retail traders will go ahead and use their trend lines like this. They'll go ahead and use their trend lines like this. This is a support. And then they'll go ahead and call this one a resistance. They'll call this one a resistance. What do you think is going to happen here? What do you think is going to happen? If you can think, use your common sense. What do you think is going to happen here according to their strategies? Now, this is what is going to happen here. Retail traders, they'll go ahead and mark because they need at least 2 touches for the trend line to be valid. This is the support. So they need a trend line like this one. All right. So they need at least 2 touches on the trend line for it to be valid. So they'll go ahead to see that there's this one touch, first touch, second touch. So they want to buy here. Why they are buying here? Because they think that this one, because they see this higher low, higher high, higher low, higher high. Now they concluded that this market is what is bullish. This market is what is bullish because most of retail traders, they don't even consider analyzing the market on the monthly time frame. They only analyzing on the 4-hour time frame, 1-hour time frame, not taking into account other bigger time frames because big institution, they are playing most of the time on bigger time frames. But the very same thing that is happening on monthly time frame, you'll see it on the 5-second time frame of 1-minute time frame. This schematic, the very same schematic that you see on the monthly time frame, it is the very same schematic that you're going to see when you go down to 1-minute time frames. That is what I'm trying to say. But for you to know the correct structure, for you to understand or for you to see or to know the correct market structure, you need to utilize the bigger time frames. You need to do what? You need to utilize the bigger time frames like monthly time frame, weekly time frames, and daily time frames, and maybe the 4-hour time frame. But these big 3, monthly time frame, weekly time frame, and daily time frame. So those time frames, they'll show you the correct market structure. So let me go ahead and explain this thing. So they said this one is higher low, higher high, higher low, higher high, which means what? And then they'll go ahead and join this trend line here, which is a support. Now, meaning they are now waiting for the pullback, for a retracement to their support for them to buy. So the price will do this. The market makers will do this. They will just do this. They'll move the price to the downside, then pretend as if they want to push it to the upside. And then you'll see price coming back like this, hitting their stop losses. So the price at this area of the support, the price will pretend as if it wants to move to the upside after touching the support. You will see one candlestick that is going up, and then you'll see the big one that is going down to the downside. That's a manipulation. That is how they manipulate traders, retail traders. I'm going to show you this example. I'm going to create a video based on the support and resistance and everything to show you how do you get manipulated in the market. So right now, the price will move to the downside, creating this one, the secondary test in phase B. It will move to the upside, creating what? All right. So now, let me try to delete these ones so that this thing will be clear to you. Okay, but I'll create another video for this so that we'll understand this whole thing. I'll create another video based on support and resistance. So now I only wanted to analyze GU. So let me go ahead and analyze GU. So this is my analysis on GU. I want it, it has to go back up in order for it to close the gap. It can then drop to the downside after closing the gap. I'm not saying the price will then drop after closing the gap. It can continue creating the new structure. Maybe it will be bullish this time, but it has to close the gap. That's what I know. That is what I know. It has to go back and close the gap. They can't leave this gap like this. I'm not saying they have to close it now, but just by what I'm seeing here, I see the Wyckoff schematic, which is the accumulation. Accumulation is telling us that the price wants to move to the upside. So if you're concluding that this one is an accumulation, there must be another reason for that. Yes, you can label that this one is automatic rally, this one is selling climax, this one is so and so and so and so. But you must understand that if the price accumulates here, where do these guys want to push the price to? They want to push the price to here, to close the gap here. As you can see the gap, they closed the first gap here, which was here. Then the price started forming this accumulation here. Then the price now is ready to shoot to the upside. After doing what? Let me show you this. Let me show you something that is very interesting here. You see here, there was this double bottom here. There was this double bottom here. There was this double bottom, meaning what? The retail traders, they were buying here. Retail traders, they were buying based on the double bottom. There are traders who are trading based on W or M pattern. This was a W pattern. This was what? A W pattern. Let me try to show you that this one is a W pattern. If you move like this, like this, like this, I mean, not like this. I'm sorry about that. Not like this. Let me try to remove this one. And then like this. You can see that this one is a W pattern. So these traders, they are trading based on W patterns and M patterns. I hope you agree with me on that one. So let me show you this. Let me show you this, the danger of trading based on retail patterns. You must only trade market makers pattern, not retail traders pattern. Now, let me show you what is going to happen here. What happened actually? You see here, the retail traders, they'll go ahead, they'll realize that this one is now an M pattern because it formed what? A double bottom here. So they'll go ahead and buy here. They'll go ahead and do what? And buy here. They'll buy here because they see what? A double bottom, right? So now what is going to happen then? The price will push to the upside like this, meaning if they are buying here, their first TP is here. Their TP is here. If they are buying below here, their TP is where? Is here. Let's see what happened. The price, it didn't reach this area here, but it went like this and it went back by just 2 or 3 candlesticks. You see, it went back by just 2 candlesticks. It took 1, 2, 3, 4, 5 candlesticks to go to the upside. It was very slowly to move to the upside. But when it came back down to grab liquidity, it won't even give you a chance to close your positions. They won't, these guys, they are heartless. They won't give you a chance, even 1 minute chance to close your trades. You see? So they move the price strongly like this, creating a spring, grabbing liquidity that was here, also here, also here, and also here. There was a stop loss that was here, and also here, and also here, and also here, by just this one move. You can see now, that is what gave them a power of moving the price to the upside. As you can see, it moved like this after grabbing liquidity. What I'm trying to tell you is that the price will not move just like this without grabbing liquidity, without hitting our stop losses or retail stop losses. That's what that is what I wanted to clarify to you guys. So let me go ahead and analyze. So now the question is now, you're asking yourself a question that, all right, Pips of Africa, we see that, okay, let me try to use this one here to indicate the gaps. Okay, now you have a question. I'm sensing that we have this question now. You are asking yourself, now, Pips of Africa, where are we then taking our trades now? Because it's clear now that you have to buy this market. where are we supposed to be buying this market? Let me show you. I have an answer for you. Where are we supposed to be buying this market? Let me show you this thing. All right. So let me go ahead and show you this thing. You must agree with me that this is not the final time frame. On the monthly time frame, you're not gonna place you're not gonna be placing your entries. Your entries are not on monthly time frame, because the equity that you have is not enough for you to do that. So let me start by going to weekly time frame, but there was no need for me to go to weekly time frame. I'm trying to check if there is any interesting order block on the weekly time frame. If there's any interesting order block on the weekly time frame. Okay, so now you can see that if I check here, there was this order block here, this one. As you can see, it's here according to weekly time frame, this order block here. This order block here. You can see that this order block, this one, this order block here, it got broken by this move. It got what? Broken by this move. It was never respected. The price did not respect this order block here. But after that, what we saw happen is that the market, it came back down to mitigate this price, this order block. Now, after mitigating this order block, so now it became the breaker block. This one becomes what? It became what? A breaker block. There was this gap here. Let me talk about this thing. There was this gap here. So let me talk about this. I want you to take note of these things that I'm teaching here. They are very, very, very important, good people. You must not sleep. You must try to grab each and everything that I'm saying in this video, because I'm trying to cover everything within this short time. So, okay, so now we have this kind of stick here. I want to show you something here, that here, okay, let me start by highlighting these ones. Like here, I'm going to highlight these three candlesticks and show you some secret. Okay, you see this sell before buy. That one is an order block. This sell before buy, that one is an order block. Let me try to show you that. This is what I'm talking about. Okay, so now let me try to mark it up for you. You see, this sell before buy is an order block itself. This one is an order block. Leave alone this one, this buy before sell. This one, sell before buy. Sell to buy. This one is an order block. After doing that, the market went to the downside. So we have two order blocks now. We have this one, we have the sell to buy and the buy to sell. In the same area, we have two order blocks. The question is, which one is the market? Which one is going to be respected by the market? You can see that firstly, the price, these guys, they started by pushing the price like this. Doing what? Mitigating the sell to buy order block first, before mitigating the buy to sell. So that is why the market, it broke this order block, this one here, because the market, it came inside this zone where there are two order blocks, where there is a sell to buy order block and the buy to sell order block. So the market, it once went inside, it got inside these two order blocks to mitigate them, but it didn't mitigate all of them. It only mitigated the sell to buy order block, meaning the buy to sell order block is yet to be mitigated, or is not mitigated yet. That is why the price broke here, because it once got inside here, meaning in the second time, it will break it like this and then come back to do what now? To mitigate the buy to sell order block, which was never mitigated. I hope that one is clear. Let me say this thing slow. The price will move to the upside to mitigate the sell to buy order block and then push to the downside before, and then when it comes back in these zones again, it will break this zone here, this point of interest. You see? So this one was a supply. It was supposed to hold the price to the downside, but the price, it went back up To mitigate the sell to buy order block, it went back down and then it went back up, violating this supply zone here. Now the price, you remember that the price, it only mitigated the sell to buy order block here because there are two order blocks in the same zone, in the same area. So the price has to move up like this. And then this supply zone will turn into demand, will become a demand zone and not a supply zone. So that is why you see the price coming back down here, now mitigating what? The buy to sell, the buy to sell order block, which was never mitigated. That is why you see the market rallying to the upside like this. That is what I wanted to clarify with you guys. So let me go ahead and go down to the daily time frame. Let me go down to daily time frame and tell you and show you something interesting there. Let me get rid of these trend lines. I just wanted to clarify this thing to you guys. To all those that are in my Facebook group, they know all these types of order blocks. I mean, even on my Telegram channel, they've sent the different types of order blocks and how to trade them all. So this is what I was trying to show you guys on that day. So that is what actually happens. Let me go down to daily time frame and show you something. You can see that here, this move that has taken out liquidity, this one here, if you can go there, if you can check those types of order blocks, I'm going to send another, the same picture that I've sent last time. You will see something like this. You will see something like this one. You will see something like this. This one is also an order block. I've also mentioned to you that how to trade this order block. I've also taught you guys how to trade this order block here, which if the order block that is looking like this. You see, the price, it went back down. We were supposed to be taking this trade around exactly here. If you can go back there and check all those types of order blocks, you will never go wrong. And try to practice them now over and over and over and over until you are perfect with them. So go ahead and check all these order blocks. This one is also there. I mean, this one is also there. And also this one is also there. So go ahead and check or practice all those order blocks so that you will be perfect here in this market. I'm not saying you won't lose a trade, but you must win most of the time if you are using this concept correctly. Let me repeat that, guys. If you are using the smart money concept correctly, you must win most of the time. Obviously, you lose, sometimes you lose, but most of the time you must win if you're using this concept. You must see some improvement to show that we are now using the strategy that is being used by the big players. Let me go down to daily time frame and try to show you something very, very interesting there. We are coming toward an end of this video, by the way, but let me show you something very interesting here. Right, let's talk about this. You'll see the same thing will keep on happening over and over and over and over. So meaning if you keep on, if you are honest to this concept, if you lose, your losses will be small, your wins will be big. Let me repeat, your losses will be small, your wins will be big. If you remain honest to this concept, if you're using them, if you don't violate each and every rules, if it each and any one of the rules that are being used by the market makers. Okay, so let's check here. There was this thing here. There was this. Okay. There was this one here. There was this double bottom here. There was this sorry about that. There was this double bottom which was here. There was this double bottom which was here, meaning this one, there was a lot of liquid, a pool of liquidity below this double bottom here. This is the another one. This is another W pattern. So you can see that the guys, the retail traders, they bought here. They took their profit here. They were successful on this one, because you must always remember this. For the market to continue operating, you see, the market makers or the big banks or the big institutions, they need us as retail traders. So in some other time, they will allow us to win so that we will not give up in this market. They will allow us to win so that we don't give up in this market. You see here, they placed their buy position here, stop loss below, and then the market, it went to the upside. They took their profit here. Some they did not take their profit above here, above this recent high. They waited for this market to go above here. Their take profit was here, which was already hit. But some of them, which are trading, which their TP are on the weekly, according to weekly time frame, their TP is not here. There are those traders who do not trade daily time frame. They only trade on the weekly time frames. So their TP is not here. So imagine the market will reverse and hit their stop losses here if the TP is according to weekly time frame. Let me repeat that. So not everyone is trading on daily time frame or smaller time frame. Some traders have a big capital, have enough capital to the point that they are trading according to weekly time frames and monthly time frames. So their stop loss is not according to this high here. It's according to the recent high of the weekly time frame, meaning their stop loss, their TP is not here. The stop loss, yes, is here, but their TP is not here if they are trading, if they put their TP according to weekly time frame. So the market will then go ahead and push the downside like this and hit their stop losses here. So this move is the one that has taken liquidity. This move here is the one that has taken liquidity. You saw this thing on weekly time frame. You now seeing it on daily time frame. So these things, they keep on happening in each and every time frame. You will keep on seeing one and the same thing on these time frames. So let me try to get rid of this one. So now we are coming into an end of our session now. So now please like and subscribe to this video, share the video, share the channel to everyone, your friends and families, so that they will also make demand in this market. Okay, so now let me try to use this trend line here. Use this one. All right, so what is going to happen is this. You can see that this one is an order block. It is clear now that our order block is this one that will help us to get entries here, to take entries and push this market to the upside. Let me show you this. Now we have to mark it like this. The order block here up until this body. And then like this, let me try to change the color. All right. So now this is how you mark up your order block. This is how you mark up your order block. This one. So we are currently waiting for the price to move like this, to move back like this, before we see the big shoot to the upside. You see, you can also put your TP there on top there. You can also put your TP, or maybe here or here. You can put your TP around this zone here. You see, now if you're taking this trade according to this order block, we have to take your profit here, or maybe if you are not brave enough, you must take your TP here. Or you must take some partials. You must partials some of your profit here. You must take some or the half of your profit here. Meaning you must move your stop loss. Do not close your positions. Never ever close your position, because you'll never make money in this market if you do that. If you keep on doing that shit, if you gonna always close your entries, you must at least move your stop loss from here, from being in the loss into profit, maybe around these zones here. Maybe give the market a little bit of a space here, you place it below here. And then you let the market run. If it still wants to go to your desired direction. If it goes to your opposite direction, against you, then it will take you out in profit at least. But do not close your trades, because most of the time you will see that after closing all your trade, the market will just rally to the upside like this. So never ever close your trade. Just move your stop loss. Your stop loss will close your trade for you. It will close your trades for you, the stop loss. Okay, you're right. So now I'm done with this video on GU. So please have a good day. Thank you so much for subscribing to my channel. Check the link below. The Telegram channel link will be there. Even the Facebook link there, Facebook group link will be there. Also, if you want to get in contact with me, even the mentorship is also available. You can join our mentorship. Each and every Friday, we analyze the market together with our traders. So now please like and subscribe this channel, comment below, share everything, share this video to everyone, with your friends and family. Thank you very much. Peeps of Africa here is signing out. Thank you so much, guys. Your boy is signing out. I'll see you on the next video. Thank you so much. Bye-bye.